All right, good morning, everyone. It is 8:45 on the morning of September 6th, 2022, and this is my pre-market strategy session. So, what I have up right now is a chart of the SPY proxy for the S&P 500. First thing we'll do here is we'll look at the daily chart. And the first thing that I notice on the daily chart here is that here on the relative strength index, we're headed back toward the oversold conditions after going right into overbought. Now, there's, something semi interesting happening here, and that is I'll be looking for a lower low on the RSI here. If this RSI doesn't make it below this level right here, and this is actually kind of splitting hairs, but anyway, right in here, if we go lower than this level 3179 on the RSI, I will be anticipating a breakdown below this 30.85 and back into territory like this over here, where things start just getting really oversold, overdone. So that's January. Yeah, makes sense. And look for an acceleration to the downside. However, if and you can only, this is only one indicator of many in the technical arena. But it's kind of the first one that I go to for just kind of a gauge as to what's going on. I mean, it's really easy to see, when things got overbought over here. It corresponds with. I'll just open up a new chart. There we go. So when things got overbought on the relative strength index here, you can see we topped out, and that and it coincided. This overbought condition coincided with the testing or the rejection off of this trend line right here. Just coincidences. And I really like to stack up. The more coincidences that you can stack up at a given price or price area, the better. I mean, you get the more people who are trading against. There could be some people trading against Fibonacci. There could be some people trading against the resistance line right here, or even investing for that matter. Looking for a place to buy and sell and so forth. And the more coincidences, the more things people are trading against or investing against, the more those stack up, the stronger the price resistance and support gets. And the higher the probability, the higher you raise your probability of success in the trade. With the more coincidences that stack up. That's it. There's no real science behind all this. There's and anybody who, you'll see people with charts that have like just an insane amount of technicals on it and stuff. It doesn't work. It's just a matter of probabilities. All right, so back to the relative strength index. The market's going to try and bottom out right here. The market is going to try. It's going to try and go back up and keep going, right here, right now. Will it fail? That's the question. And so we're opening up this morning. If it opened up right now, the SPY would be up 0.6% from its previous close. It's closed on Friday. I hope everybody had a good long weekend. Had a lot of fun. And so, it's entirely possible that could happen. I doubt it. I think, that there is still a lot of economic weakness that is putting a wet blanket on this, on a bull. I mean, the bulls are taking a nap. The bears are out to pick up picnic baskets, ruin people's picnics. That's the way it is sometimes. Yeah, let's play a game here. Let's look at these closes here. So here's a low close. And the next low close is right there. Okay, so broke down below that. Let's see. Let's put it right there. And yeah. I guess I guess we can put that line there and see what happens. So guessing, and this is all this is that okay? We moved down. That's roughly 8% between this move to this move right here, and so another move up, and then that's just my guess. Uh, let's see here. Let's put some more lines on this. Let's put some more lines here. Let's go. Let's get rid of that one. Next major candle to test is this gigantic down candle. And I'm guessing, just guessing, that this is going to be the next most significant area of resistance right here, the bottom at 405, bottom of this candle at 405. The market on Friday tried to open up to go higher to test the bottom of that candle, but really just couldn't make it very far at all. Yeah, so right now in the AM, what's going on here is we've got the bottom of this candle on the 31st of August, the end of August. Okay. So we've got a closing candle. I see. All right. Here's the test of the end of August and a fail. And now we're in a new month here. Pre-market, it's trying to break up above that August 31st close in order to get a green month going. Let's look at the monthly. No, not looking good. Not looking good. Okay, well, so anything can happen. At the moment, though, this is just another stair stepping down. So people like to say that the market takes the elevator or the steps up and the elevator down, but it's not really true. The market will stair step down as well, which you can kind of see here. Now this spike right here, big fake out. There were probably a lot of bulls who were thinking that the bottom was in right here, and this is a big move. But yeah, August really put a kibosh on that. Okay, so long term on a monthly basis. So let's go. Let's pull this up. So on a monthly basis, 409. Yeah, 409 is going to be. I don't think the market's going to see in September and October. The market is just classically these are weak periods of the market, and so we're probably. I don't think we'll see 409 at any point this time or in this month. It's going to be. It looks to me like it's going to be 376 is where the big test is going to be. On a daily basis, though, so let's go to daily and kind of make sense of what's going on here today. So right now, the market is going to try and break through the 31st of August, last month's low, last month's close, I should say, sorry. And then try and get to this breakdown candle right here, the bottom of this breakdown candle at 405. I doubt it'll make it that high. Actually, it's probably got further. It'll probably get close to 405, and then just start heading in the downward direction again. We've got another 3 quarters. See, the current quarter ends with September, October, November. So yeah, the current quarter ends this month. And then we've got Q4 of 2022, Q1 of 2023, and Q2 of 2023 that are forecast to be bearish. So looking 6 months out, there's still going to be a lot of price pressure on the market. So yeah, today I anticipate, after a big down red day like this, the market likes to suck in people on both the upside and the downside. The VIX is what is in the chop bucket. Now, the VIX over 30, sell. Press the shorts, and even if it's for a short amount of time, you press the shorts. In the 20s, between 20 and 30, it's the chop bucket. People just get all chopped up. They get long at the highs and get short at the lows, and just get are getting a rodeo ride. And it's not fun if you don't know what you're doing. So I'm generally speaking, I'm bearish. Today, though, I'm willing to look for trades to the long side to break through some of this daily price action here above 395.18. So that's in the morning session. I probably won't trade the afternoon. Bitcoin surprised a bit here. Let's go to crypto. I really expected to see Bitcoin break down at this point right here long ago, actually. I expected it to be after this rejection off of this support and resistance line right here. Actually, I'm sorry, this is a neckline. This isn't even a support and resistance line. Let's look at this. Here's, it was probably better on the weekly. Yeah, here's this head and shoulders pattern right here. And this neckline, it's just really a very reliable downtrend happening here in Bitcoin. And I'll trade against this neckline all day if I were to trade Bitcoin, but I don't. And so, if there's a BITO, but it's just not, I don't like it. BITO. A lot of these things that are proxies, even the SPY and the Qs don't trade the same way the NASDAQ and the S&P trade. It's bearish. It's just to put it simply, it's bearish. If I were trading Bitcoin, if there are any Bitcoin traders out there, this is your neckline, and this is the line to trade against, and it's to the downside. Bitcoin is doing an amazing job of holding support right here at this 19,600 area roughly, which coincides with two pretty important things here. Here's the high in 2017. Here's the 2017 high of I think that's 19,666. And then fast forward, I think it's 3 years into the 2020. Here's resistance, right? And boom, it came up, pop, hit resistance, hit resistance, hit resistance a third time, and the fourth time it busted through big time busted through. Was that a double right there in a matter of 2-3 weeks, over a double. Let's see, 19,000 to 42,000 roughly. Yeah, that's more than 100% in a matter of just weeks. A little bit of consolidation, a little bit of a pullback, and then boom, next move up. What we've got on right now, though, is head and shoulders reversal pattern right here. Here we have, and actually a Wyckoff would fit this perfectly. The next, few years is going to look a lot like the way it looked over here leading up into it. It's going to be, just kind of draining down, rather consistent draining down until finally it catches a bottom one day at some point, sometime, somewhere, catches a kind of a bottom like this, does this bottom move right here and starts moving back up again. Could be 5 to 10 years, could be a while. So, long-term bearishness on Bitcoin happening. Okay, what else is going on? VIX, the SPY, the Qs. Yeah, the Qs have been giving very similar signals as the SPY at these levels. Same thing with the relative strength index. Got overbought here on the relative strength index and heading right back in, going straight back into oversold, or going close to oversold and probably heading into oversold. Nothing moves in a straight line, of course. So on a daily basis, some gyrations, some bullish gyrations, which it looks like it's trying to do today. It'll happen, you know. So just hang in there, pick your spots, be smart about where you're going to short, you know, and have as many coincidences as possible to trade against. Yeah, looking like, you know, on a weekly basis there could be a bounce up here, yeah, let's see if I have a Fibonacci. Here we go. Oh yeah, look, so I have the 25% from this recent high down here to this low. I should put it at the closing. This is on a weekly basis. Let's go to the daily. Daily, yeah, there we go. Yeah, I need to put it at the close rather than at the all-time high. And there we go. And so I like to use the 25% instead of, I've forgotten what the Fibonacci is. I think it's 23% or something like that. I don't know, I just prefer the 25 and 75 rather than the Fibonacci's. The only two true Fibonacci's here are the 61.8 and 38.2. The 50% Fibonacci actually isn't a Fibonacci, although it shows up in the sequence, in the Fibonacci sequence. It's not actually a Fibonacci. So, yeah, here we go. So we're flirting with the 25% line from this move down right here, making a little bit of a bounce at the 25% level. You know, it's weak. It's weak. So the 50% level, here's 38.2. And at 38, you know what? 409 is just north of that 38.2. 408.95 is at the 38.2. So yeah, I imagine that the market is going to make a little bit of a run for this level again here in the next few days, and I think it's going to fail. So yeah, we'll see what kind of action happens today. Now, of course, if today starts to break down below 390, if we start getting a day where we start flushing down below 390, press the shorts. It's time to go. All right, everybody, good luck out there. Good luck out there. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy